Hello and thanks for joining me again. This is the US Futures weekly chart analysis for the week ending the 5th of August 2022. As usual, we start with the US dollar index. It plays such a big part in the analysis for many of the other charts that we'll go through shortly. If you remember, we've recently seen some supply coming in up here at the highs, and in response the market moved lower. This week, price tested this breakout line at 105 and responded positively and closed higher. Volume was again a little high considering the amount of spread or range on the bar. You would expect after price had declined, tested this breakout line, responded positively on an above average volume, that the spread may have been a little wider. So this little pullback may not be quite over yet. It appears that supply is still being drawn out. But we'll just have to wait and see. The market may just gather itself up and move higher in response. But at this point there is still some supply in the market, and the market had to put in a bit of effort to absorb the seller's supply and move higher this week. The next chart is the E-mini, the S&P 500 index futures. You can see the market came down, it broke down here. It didn't really want to break down. You can see that these two bars, the market attempted to hold on, the closes in here, didn't really want to break down, and even this bar pushed lower but closed in the top half of the bar. The market broke down here but attempted immediately to recover. It was unable to recover at the breakdown line. And finally, 5 weeks later, the market broke down. But immediately the week after, high volume came in, spread reduced, and there was a period of accumulation here. And in response to that, the market's broken out above the highs of the range, and now it's back up to the old breakdown line again. This is where the market broke down from. There's likely to be supply sitting above this line. The market pushed up to it 2 weeks ago, and this week it's effectively tested for supply. This was a test for supply, and a little bit of enthusiasm at the end of the week saw the market just pop up above the line. Now, I'm expecting there will be some supply adjacent to this old congestion to the left. We'll just have to see how strong the market is. It does look like it wants to go higher. If the US dollar does come back again next week, this would allow the market to push higher. If the US dollar continues higher next week, it'll put a little bit of pressure on this market. There may be a secondary test for supply, or the market may even turn and move a little bit lower again. Within the range of this bar, everything's okay. A pushback below this line here would see price back in the relative safety of the older accumulation zone. So there's quite a bit of support below the current price. Next chart is the US Treasury 10-year note futures, which attempted to break out above this level 2 weeks ago. The next important line is through here, and prices rejected it by the looks. It's moved into that zone where you would expect some resistance to be, and price has closed back adjacent to the lows of the previous bar. So all's not lost. You might find a test for supply in here next week and a secondary attempt to push higher, but the market has at this stage rejected pushing higher, failed, and moved back lower. It would really take a close clearly below this level at 117.5 to really see the market break down further. Anything around the 120 zone, either way, will be in a relatively comfortable zone. Copper price futures. Copper price futures broke down. Just look at the weakness that emerged here, which was effectively the strength in the US dollar at the time. There wasn't really a great deal of buying in the bottom of this bar, but selling pressure did appear to reduce, and that allowed the market to pop up a little bit. There was some buying in this bar by the looks, and this week was a test for supply. Volume was a little bit high again for a clear test of supply, but the fact that spread narrowed considerably, compare the spread on this bar when it went up on this much volume. This week was a fraction more volume, and look how narrow the spread is compared. It's less than half the spread of the previous bar. The market has absorbed or bought the supply coming in from the sellers. This suggests this market thinks it's going higher. There may be a secondary test to prove that supply or selling pressure is now low before it does so, but this suggests the market is thinking it's going higher, and the market is buying or absorbing the supply being drawn out as part of an accumulation, and also in preparation for that move higher, because markets can't move higher very easily if supply is being drawn out. Markets move higher easily when there's no supply in the market, and a small amount of buying can push prices up with ease. So there was buying in the market this week. It was perhaps a little bit more supply than I'd like to see down here, showing in the volume. All the same, spread narrowed considerably. The close was up near the high of the bar, and price appears poised to push higher. The next chart is gold price futures. Just compare how far copper stretched lower compared to gold on the strength in the US dollar. Gold has been acting much more strongly. In copper, price was much lower. Now, we identified a month ago that strong buying came into this market. On this bar here, spread narrowed considerably, volume increased to well above average. There was a test for supply in the next bar, and it eventually closed higher for the week. This was buying. This was buying in the bottom of the market, and you can see that the response has been for price to continue higher. When you see volume like this, above average volume but below average spread, you should take note of it. In the 60s and 70s, before we had electronic charts like this, and they were hand drawn on big 6-foot sheets of paper with 1 metre rulers, they would have put something on the chart to remind them of that high volume. Tom Williams used to say he would put a wad of gum underneath that volume to remind him that it was there. This was buying in the market, and the response has been positive to that buying. Now, prices moved up this week, although it's closed off its high, probably because of the strength in the US dollar. So this little bit of weakness here in the top half of the bar was what was caused by the US dollar being strong towards the end of the week. Volume was not very high, and that's probably showing you that selling pressure isn't really that high. There's a good chance price will attempt to continue higher and move up towards this 1800 line. This is the important line in the short term, and this is the important line following that. Any push above this line would be significant, as would, in the short term, a push above 1800. You may find that the market tests for supply initially next week, and if the coast is clear, it might pop up a little higher, or it might be the following week that it pops up higher. But this market is looking much stronger than many of the other associated markets. Silver price futures. Now, silver price futures broke down here and here, and were acting much weaker than gold overall. A little buying came in on this bar, similar to the gold chart, but not as much as in gold. This week price closed a little lower, but it made a lot of ground the previous week, more than gold. So it's effectively attempted to test for supply this week in a similar fashion to that copper price chart. Volume was once again quite high, or at least a little bit above average, but spread was very narrow overall. So the market, similar to copper and gold, is attempting to absorb the supply being drawn out in the market, and it also looks poised to make an attempt to push higher. So perhaps if we go back and have a look at that US dollar chart again later, there is some chance that the pullback isn't over, because these other markets are suggesting that they may like to go higher. That would be suggesting that the US dollar is probably going to either go sideways or lower itself. Like crude, price futures have broken below the lows of the range this week. It did appear that the market was attempting to accumulate in here, and price has broken down this week and closed below the lows of the range on an increase in volume and slightly above average volume. Not really excessive though. There is some chance of a reversal immediately in response, and you might get that if the US dollar did fall next week and not rise. If this market does continue lower, you've got higher volume here, which is this bar. You probably see price move into this sort of level, at least initially, and below that you've got here. So they're the two levels you'd be looking at, somewhere around the 70 and somewhere around the 80. But don't discount an immediate reversal just yet. This has been a pretty strong market for a while and may just be testing the lows. The response next week will be important. Aussie dollar currency futures, which broke down quite a while ago from the important 70 cents level. You can see price tried to hold on a couple of times, but eventually failed. There has been previous support around 68, although it's only minor. It did hold at this stage though, and price attempted to move back up to the 70 cent level, but any chance of recovering that level failed, at least initially. And we'll see how it goes next week. This rise here was mostly due to the weakening in the US dollar after that supply came in, which would have corresponded with this bar, and then 2 bars lower, as this market then trades the inverse and moves 2 bars higher. And then the US dollar was up this week, so this market was down this week. So it really is moving mostly the inverse of the US dollar at this point, and less so with the fundamentals associated with the Australian economy. And Bitcoin futures have been attempting to consolidate. There's the 2 previous breakdowns. There was an attempt to consolidate in here which failed, and the market's attempting again to consolidate, and it looks much more successful this time. Spread this week was very narrow. Generally when spreads or range like this contracts considerably, there's an expansion in range in response. You can see volume was very low. The previous week there was buying support in the bottom of this bar, and then price popped up to close higher. This looks like good strong buying of what supply was being drawn out without the market attempting to push price higher. This was buying what supply was being drawn out pretty much naturally in the market, some form of accumulation. And this week was more or less a test for supply with a very narrow spread on very low volume, which is just illustrating that selling pressure was very low in the market, at least at this level this week. This market also looks poised to move higher. When spreads contract like this, it can move in either direction as an expansion, but this market, just on the recent price action, looks like it may attempt to move higher. So we'll just have to see. I expect that there will be some resistance at this level. There will be a lot of people, I would expect, that didn't sell when price broke down below 30,000. They're still holding in here and may be inclined to sell for break even after being considerably down on their luck when price was trading down here around the 20,000. So expect some resistance around 30,000 if price does attempt to move higher, and that may cause price to bump around for a little bit before price actually does move significantly in one direction or the other. Just quickly back to the US dollar index futures. Some of the associated charts were suggesting that they wanted to go higher, and that means this market will likely come back and perhaps test this 105 level further. We did have supply coming in here for sure. There was a response lower, as you would expect. Volume was above the average this week, and spread was average at best. Supply was still being drawn out. The other markets are suggesting they may be inclined to move higher, which would suggest this market is going sideways to down in the near term. So look for a secondary test of 105 next week perhaps. I initially thought that this market might be ready to move higher again, but that may not be the case. The early trading next week will probably tell us the story. Okay, that's my lot. Hope that was worthwhile. Thanks for your time. See ya.